Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, business managers, artists, you name it, across the world of crypto and blockchain. And today I have an amazing guest. He's coming to us from Amsterdam. I am looking forward to this interview. From Maple Finance, I have the business operations manager, Martin de Rijke. Martin, welcome to the show.
Thank you. Great to be on here. Thank you for inviting me.
You're very welcome. Thank you for joining me today. And let's kick things off. And I think it was how I heard from you because you went to Consensus, right?
Right. Yeah, that's correct.
And what'd you think?
Yeah, I thought it was really good. I think it was one of the best conferences of probably the best conference of this cycle. And I think there might have been a better one last cycle, but we're getting up there. So that's good. The vibes are good, the energy is good, people are building, there's new people in the space. Things are growing. Traditional finance is slowly but surely starting to put their footsteps into these conferences as well. So we were very, very happy with the results. And the other thing that was good is that, but we aren't yet to the levels where it's so frothy that, there's like a lot of, people that are not really building, right? That are not really in it for crypto. So I thought the quality of the audience was really high. So we had, a ton of good conversations. We had a ton of good partnerships coming out of it, new users. Basically every conversation was high value. So yeah, we were really plus we had a breakfast, a pancake breakfast, and it was, extremely oversubscribed. So there are like hundreds of people looking to attend, but we only had 50 or 75 seats. So it was it was a good problem to have.
Yeah. So next time I'll give you some words of advice. The other people who weren't able to attend, we had to go to Starbucks and stand in a long line. So if you could have like a bigger room next time, I'm sure you'd fill it. So
Sure.
that sounds good.
Yeah, stay tuned for Paris, or sorry, Brussels this year, ETH I don't know if you're going to be coming, but we're actually going to do a much bigger event, simply because of the oversubscription on the breakfast. We're going to do a several-day breakfast. Let's call that. It's going to be good.
Very cool. So let me ask you first, about your background. What is your background, and is it logical to what you're doing now?
That's a great question. So yeah, in 2015, I bought my first Bitcoin. So I was always fascinated by finance, since I was very young. And I looked at Bitcoin. I was like, some magic internet currency. I asked to my grandparents what it was, and they were like, we have no idea. So I just started looking into it, and quickly understood that this was going to be transformational. So got into it, and in 2017 really became active. So I've always been doing it on the side, and only in 2022 actually made the career move into crypto. And now working at Maple, doing operations, as well as currently being responsible for growth on the syrup side. So which is more like our DeFi product.
Very cool. Very cool. So yeah, so I want to find out what you guys do. What Maple Finance is all about, and why you've been so successful so far.
Yeah, so we are really an institutional DeFi marketplace. So we basically do lending and borrowing. So borrowers, come to us and they can post our collateral and get loans against it. And all borrowers are institutions. So, just the big names in the space. And then on the lender side, they're basically high net worth individuals and institutional lenders that deposit their funds and, to earn a yield. So what we really do is we are basically the flag bearer for bringing institutions really onto the blockchain. So not just institutions, buying the Bitcoin ETF, right? Which is still all like traditional finance. We are really about bringing institutions on chain and actually earning their yield on chain. So we, work with a lot of the big institutions in the space that I'm sure you know. Obviously, I cannot really disclose specific names, but it's really all the big names.
You don't need to discuss individual names, but you chose to focus on on-chain companies as opposed to bringing, big traditional finance Wall Street guys into Web3. You chose to focus on crypto native institutions, right? So how was that decision derived? And apparently it's been a really good one, right?
Right. Yeah, so we aim to do both. Just in the short term, it's a little bit less friction to bring like the crypto native folks on Maple, right? Because they are already familiar with the blockchain. They're familiar with how to use wallets and how to use custodian and things like that. But we are also bringing the more traditional firms onto Maple, which is also is not just due diligence from their side, but it's also very much education, right? Like explaining how the blockchain works. So we really do both. But obviously, most of our growth has been on the crypto native side.
Great. So I want to talk about a little bit about that growth. You launched Syrup recently. What is Syrup? And my question says, why will people find it to have some stickiness, in the institutional crypto market?
For sure. Yeah, so Maple, institutional lending is available for institutions, right? So you need to be accredited, an accredited investor to get access, which is a pretty high bar for, folks like you and I to meet. So what we do as Syrup is we basically open it up for everybody, right? So it's permissionless. So you don't need to upload your passport. You don't need to be accredited. You just connect your wallet and you make a deposit, but you still have access to the same yields as that you have on Maple. So you still benefit from those institutional, high quality, consistent, sustainable yields. But you have seamless DeFi access, which then also enables all of the other benefits of DeFi, right? So you can put it in an AMM and you can, unlock liquidity. You can put it in a lending and borrowing protocol and use it as collateral and borrow against it. You can do looping strategies to earn additional yield. So it opens up all these beautiful DeFi primitives. And it's really a bedrock yield asset that generates institutional high quality yield.
You said a word there that I don't recognize. You did say borrowing and lending. I know what that is.
For
You
sure.
know, looping. You said looping, right? What is looping?
Correct. Yeah, that's a great question. So borrowing and lending is just, let's say you have ETH, you post it, right? You borrow against it, right? So that's borrowing and lending. And then what looping is that you do that a couple times. So you basically loop your borrowing and lending position. So what you would do, for example, in this case, is you would post your Syrup USDC, right? Which has like a 15% yield, let's call it. That's like our target APY. That's what we have generated over the past 3 months. But you would post that as collateral, and then you would borrow stable coins against it. So let's say you would borrow USDC against it. And on those USDC, you might pay, let's say, 5%, just for the simplicity of the example. So that means that you have like a 10% spread, right? Because you're earning 15% on the Syrup USDC, but you're only paying 5% on the borrowing position. And what you can do with those stable coins, you can again put them into Syrup USDC, right, which is like 15%. And then you can do that a couple times, right? So you can pledge it again as collateral. And if you do that a couple times, you can actually earn much higher yields. And this is how this is why a lot of people use DeFi, right? So for example, there are Athena positions. They, the reason why the DAI pool was so quickly filled up is because people were using this, right, to essentially lever up their positions. So I mean, we wouldn't necessarily be endorsing that, but there's just a subgroup of people that love to, lever up their DeFi yield positions, and I think it's something that should be available.
All right. So let me see if I get this, and I want to see if there's a difference between what you do and what I used to do. When I was a Celsius customer, I would have money on the Celsius platform. I would take a loan, right? With that loan, it would be then I would take the money and I would put it back into the Celsius, and I would take a loan off that money, and I would keep doing that until I got to zero left to put as deposit for a loan. The problem there was that there was TVL, total value locked, and the market tanked. I got a margin call. Luckily, the one time I got a margin call, I was able to cover. So, how does what you're doing an improvement with looping with margin, you have margin calls, do you TVL? What are the requirements? What's the improvement?
For sure. Yeah, that's a great question. And to your point, like it is a risky strategy, right? So, this is really not an endorsement, but and what you say is accurate as well. Like there could be margin calls. The main difference here is that in the ideal situation, like Syrup USDC and USDC are like the same value, right? Because they're both USDC denominated assets. So if you deposit Bitcoin and then borrow USDC, then obviously Bitcoin and USDC are very different values at all times, because Bitcoin can just go up and down. So I would say that is the main benefit. If you have a yield-bearing version of a stablecoin, assuming that it will stay backed, right, to the stablecoin, that's a big assumption and obviously a risk that everybody needs to take into account. But that's the reason why it is different. So, and that's the reason why, for example, a lot of people are doing this with staked USDE, like the Athena token.
Okay, so you're doing a staked Ethereum. They're doing with stable coins, and I was doing it with Aave, Bitcoin, and Chainlink. So
Much more, yeah.
it's much more volatile to do it with non-stable coins.
Correct.
That makes sense. Okay, so there's a long tail path of bringing capital markets onto decentralized blockchain. You said you do both. So the natives, and then your goal, is bring capital markets onto decentralized blockchains, and that's going to take, I don't know, that's a very long time project, right? What does that look like to you? How do you do it, and what does that path look like?
For sure. Yeah, that's a great question as well. And I think that's the beauty of blockchains, is that it can bring people together globally. And it basically creates global efficient markets, right? Where normally things would be very siloed. Now, you can actually bring everything on the global blockchain, which enables new use cases. And I think the main way we're currently doing that is that we, for example, we have a receivables pool on Maple, which brings, tax receivables on the blockchain. And I think that is a really exciting space, is to bring a lot of those real world assets on the blockchain and make them, globally available for folks. At the same time, I also think there's a lot of challenges in that particular domain, with like liquidity and duration and things like that. So what we have currently seen at Maple is that most success is actually just in our plain crypto native, over collateralized digital asset lending strategies. And the reason is because they are shorter duration. So if you want liquidity, you can have it in like 30 days, right? You're not locked up for a year or 2 years, which happens a lot with like the real world loans, right? When a business takes a loan, like, they don't want to have it for 30 days. Like, they want to have it typically for like a year or more. So I think that it's going to be a long grind. We are really finding our product market fit in the crypto native vertical, and we can scale that out over time, right? And add those additional real world verticals to the mix, which is also I think the beauty and the elegance of the platform, in that different pool delegates can also come to bring those different strategies on the blockchain. But for now, I would say the first bridge is really bringing those shorter term corporate loans on the blockchain. Like that's really what what actually there's actual product market fit between DeFi and real world assets.
That sounds good. You said a magic word there. You said durability. A lot of people try to achieve durability, and a lot of people don't achieve durability, right?
For
How do
sure.
you get it done?
Yeah, so I think it really comes down to, most of our team comes from traditional finance and has worked at all the big financial institutions. And you can say what you want about that, but it's really high quality and proper credit underwriting, right? There have been certain systems and procedures that have been built in over decades, often learned through pain, right? Like the traditional system had a lot of blowups and failures, but that also resulted in new regulations and new procedures and new ways of doing things and new standards that have been adopted. So we definitely want to learn from all of that. and bring that into our business, right? And that's also why most of our team actually comes from traditional finance and brings all of that to the table. So what does that mean? We have very good procedures for all of our commercial and credit operations, right? So we check all the balance sheets of borrowers. We underwrite them, we check their financials, things like that. And at the same time, we have very sound procedures for what digital assets require, which is 24/7, 365 monitoring, right? Because prices move at all times, including over the weekends. We have relationships with OTC desks, right, to sell collateral in case there would be a liquidation event. We have automated margin call setups that send margin calls to borrowers in case you just explained about your margin call situation, right? Like that's also something we need to handle, but then at scale with these institutional counterparties, and then making sure that those margin calls are met, and if not, we need to proceed to liquidation. So all of those processes are all set up, robust. They're tested over the past year or so, and now we're actually bringing that to a wider DeFi audience.
Yeah. So there was a lot of knocks on DeFi back a couple of years ago that it didn't work, right? But when these companies all imploded, payments were made like effortlessly and flawlessly between the failing companies, because it was all on a smart contract and it wasn't, subject to subjectivity, so, what are the benefits of having, I guess, I was a DeFi on chain, but it is on chain by definition. What are the benefits of setting up these processes, and helping the Web2 companies transition some of their processes to Web3 so that it's automated and automatic for them?
For sure. Yeah, that's a great question. And that's basically the second part, right? So the first part is like all this institutional, traditional finance, taking all those lessons on board and like implementing the good things. But obviously, what are the issues there? Lack of transparency, lack of automation, it's not global, all these different systems are not talking to each other. Like the infrastructure is very inefficient, right? And everybody knows that. And that's why everybody came to work at Maple, right? Because they were like, this is not sustainable. There's just so many issues. Now, the beauty of the blockchain is, to your point, everything is global. Everything is pretty much instant. Like we like to complain about, like 1 minute settlement times, which, obviously it should be shorter. And, folks like Solana are obviously building that, but in traditional finance, it can take much longer than that. So, and it also brings all the transparency. So that's the beauty of Maple, is where all the loans are transparently on chain. So you can see at all times, are the borrowers actually performing to their obligations? Like, are they actually paying interest? Are they repaying principal when the loans are called? What is the live status of collateral, right? Are the loans all over collateralized? Or in fact, are they not, right? So everybody can keep us accountable. It's not a black box like Web2 or how CeFi used to be. And it's really all transparent on the blockchain, which keeps us honest and keeps all lenders informed about the actual status and what's actually happening with the capital that they provide.
Very cool. So I'm going to look at what you talked about. Like, when we were at Consensus, the big talk of the town was the current regulatory environment, how U.S. Congress had just passed a bill overturning this really shady or crappy accounting rules, and then the day after everybody went home, President Biden vetoed that, right? And so we're back in the uncertainty. We're back in the uncertain regulatory environment now. So, and regulators don't like, for some reason, at least in the U.S., don't like DeFi yield. They like only banks providing yield, and the banks provide like 0.25% if you're lucky. So how do we navigate today's DeFi yield opportunities in this uncertain regulatory environment?
Yeah, that's an excellent question. And also something that I don't think anybody has the answer to, right? So it's really difficult to know, because to your point, it changes every day, basically, or every week. Like there's new stories. And I think there's a lot of division as well in the regulatory bodies themselves. So you obviously see people leaving these regulatory agencies. People have different opinions that they're voicing publicly. I think, a lot of the Congress itself is very divided. So I think I think everybody needs to, decide how they vote, right? In the end, we are living in a democracy. And, I think everybody, if it is an important enough issue to citizens, which I think it is, right, to many citizens. Like I think in the US, we were more than 50 million people held crypto, right, with this Coinbase campaign. So I think everybody just needs to, vote with their feet. And then I think it will get sorted. I mean, the optimistic side of me has always believed that the US is going to get it right. And let's be honest, like the US is really the main place that matters, right? Like if the US gets it right, like everybody else is going to get it right as well. But in the end, for whatever reason, the US just always seems to make it happen and attract all the innovation. So we are definitely not betting against the US. Like the Maple Nexus is also in the US, right? Like a large chunk of our team, a large chunk of our clients are all in the US. So we very much believe that the US is going to get it right. But how that is going to happen exactly, we don't know. But it will happen, and I think you're starting to see a lot of positive signs already with the Bitcoin ETF, the Ethereum ETF. A lot of the big institutions like BlackRock are obviously, flag bearers for the industry now, which is a huge change from 1 year ago. So yeah, we are optimistic, and personally, I'm also, a very optimistic person by nature, but I think it's also rooted in reality at this stage.
I think you're right. What it looks like though, no is anybody's guess, right? Trial and error. So, eventually we'll get there. But you said something. You said vote with your feet. I don't know what it looks like in the Netherlands or what it looks like in certain European countries this coming fall. In the US, we have a presidential election. I think somebody told me there's about 30 elections, so we have a really dynamic political environment. We also have an environment currently this week in crypto where the prices have crashed, you know. So the question is, what does the rest of the year look like? And what are going to be the opportunities in DeFi as we go into this election cycle?
For sure. I think that's a great question. I would say there's just so much innovation happening every day, right? So if you just look at the number of new projects, the number of existing projects that are shipping new features, the amount of capital coming in, the amount of talent coming in, I mean, it's just incredible. Like if you look to the amount of talent coming in from all these different industries into crypto. So I think it is like a ball that you hold under the water, right? Like the longer that the price stays flat or trend sideways or whatever, like the harder that ball eventually is going to come out of the water, and the higher it's going to go. And the reason is simply because fundamentally so many good things are happening, right? If you look now, for example, to this Coinbase smart wallet, I mean, that's super exciting. I saw the other day like a new Solana wallet where you don't have to store your own keys anymore, but it essentially just uses your fingerprint, to store your keys, and it's still fully non-custodial, right? So it is still fully self-custody, right? Like nobody else is holding your keys. I think these type of innovations are needed to bring everybody onto the blockchain. So I think most importantly, everybody just focus on building, keep building, keep shipping product, which is what we have done as Maple. I mean, at the bottom of last bear market, we were essentially at zero TVL, right? We had to start from scratch. But we kept building, we kept, grinding, we kept finding new users, and slowly but surely, you will find product market fit and you can really start scaling. So I think that's the key. And right now we're at the most exciting point, I think, of the cycle, which is the point where, not everybody has entered yet, but it's going to come. And it is going to come. And at the same time, there's just a lot of opportunity and there's sufficient capital and sufficient users to actually get something off the ground. So I think it's, like we're at the best time ever if you really zoom out.
I think so too. And it is kind of like that early dial-up internet phase where you had that screeching sound and you're waiting for the phone line to work. But eventually everything became, iPhones and Androids. So,
100%.
uh, so let's talk about those retail users, right? Um, they're going to come, right? But they're going to come they're not going to come via meme coins. They're probably going to come through point programs. You know, what is the future of point programs in Web3, and why is it a massive opportunity not just for retail but for Main Street as opposed to Wall Street?
For sure. Yeah, that's a great question. And I think, at Syrup, to start there, we also have a point program and, to incentivize users, right? So we have to like 15% yield. And then on top of that, users can earn drips. Now, the way that we have structured it is incentivizing actual long-term users, right? So if you, for example, commit your capital, so you lock it up for a certain amount of time, you will get additional drips. Or if you then use your Syrup USDC token in elsewhere in DeFi with one of our partners, you're also going to get additional drips, right? So I think the key of a points program is to incentivize the real usage of your protocol in the way that it's supposed to be used. For the way that, for like what its intended build is. And what is our intended build? Our intended build is for you to earn long-term yield, right? Stable, consistent, long-term yield, as well as for you to use it elsewhere in DeFi for your liquidity needs, or, if you want to lever up, or, have any other strategy. So I think that is the key to ask as a project is, like, what am I trying to build? And then you want to incentivize the behavior in users that you want to see. And I think a points program is an amazing way to get off the ground, because in Web 2, we have seen that, those networks are dominated by network effects, in the sense that the larger you are, the larger that it is to kick you off the throne, right? So try to displace Facebook. I mean, even the CCP hasn't been able to successfully do that with TikTok, right? Despite unlimited resources, essentially. So I think the key is that the only way to break through those network effects in Web 2 is to actually have those incentive programs, to incentivize your first users to use your product. Well, the product is probably going to be worse than whatever mega competitor there is out there. But the only thing that actually does make it better is because you got an incentive as an early user, and you're part of the long-term success of that product. So I think that is the key, is aligning your users with the long-term success of the product.
And what I think works well with point programs is also utility. So what utility do you offer your users of the point programs?
For sure, 100%. I think that's aligned with the point around enable. Like what do you want your product to be used for, and how can you incentivize that usage, right? So it's not just mercenaries, but it's actually real users that give you like feedback loops on like how you can improve your product, right? Because in the end, it's mostly pilots, right? It's just beta products in the beta phase that are trying to find product market fit. And this is a great way, together with your users, to iterate yourself to a place where you can actually get mainstream adoption. And the reason that the users are using you is not just because they like it, but also because there's an incentive on the other side.
Well, that makes all the sense in the world to me. So that sounds really good. So one last thing I want to ask. I have two last questions. First one is this: is I get people who are experts in DeFi, because I enjoyed DeFi Summer a few years ago so much, and I've been dying for it to come back, and it hasn't yet. When do you think we're going to see the next DeFi Summer, and what's going to be the catalyst for that to happen?
Yes, that's a great question. I mean, I would say that, we might actually be in a DeFi summer at the moment. Obviously not price-wise, but I think, sometimes fundamentals lead price, and other times, price lead fundamentals, right? It's an eternal debate, like nature versus nurture. But I think if you look to the fundamentals, like Aave recently crossed 20 billion in TVL. I mean, 20 billion, that's a lot of money, right? Like that is just a small scale economy, like of a small, like a small European country, right? Like that is enormous. I mean, Athena went from 0 to what is it now? Like 3 billion or so in a matter of a couple of months, right? So I think we have just gotten so used to 2 billion, a billionaire, a billionaire, that, it almost starts to become a little bit desensitized to it. But what it actually means is like those are gigantic numbers. So I think the main thing is that the prices might have not caught up yet in DeFi itself, which I think the main reason could just be that it's because of fundamentals, right? So a lot of these projects are now valued based upon fundamentals instead of based upon narrative. So if you look to the AI tokens, for example, it's all narrative, right? Like there's not much actually being built. And it's a lot in those type of cases, prices can really outrun themselves. But once you can actually see the fundamentals, things typically become a bit more reality. But yeah, so that's my take. But I think innovation itself is really flourishing in DeFi.
I like the take. I like your assessment. I like that. You're the first person that I talked to who said, yeah, interesting. Thank you.
Sure.
So I want to thank you very much for your time today and talking to me. I enjoyed speaking with you, and I have one last question. It is, how can people find more information about you, about Maple Finance, about Syrup? How can they become users and clients?
Great question. So yeah, just go to syrup.fi, and we got all of our links there, and you can sign up as well for early access. And if you listen to this once we're live, so then you can make it a deposit as well if you want.
It sounds like I want to. So thank you very much for your time today.
100%. It was a pleasure. Thank you for having me on.